Hello, this is Olivier Wagner from 1040 Abroad. You can check me out and contact me at 1040abroad.com, 1040abroad.com. Today, I will discuss the foreign currency and your US expat tax return. This is an essential point because your US tax return obviously is prepared in US dollars. And most of the transactions that took place in your life, in your foreign country, took place in a foreign currency, in a currency other than the US dollar. So somehow these amounts will have to be translated from the local currency into US dollar. Exactly, change translating foreign currency amounts to US dollar amounts. So we have several options to use when it comes to exchange rates, right? The first one is the spot rate. So the IRS does not disclose spot rate. They simply say that you should use a reputable source on a consistent basis. For instance, when I deal with Canadian clients, I would often use the Bank of Canada's exchange rate because that's the rate that they have to use on their Canadian tax return. This way you can do a round trip, translate from Canadian dollars to US dollars and back into Canadian dollars and end up with the same amount. But really, any exchange rate from a reputable source will be accepted by the IRS as long as it's used on a consistent basis and not in a way to distort income. Right, so one option would be the spot rate. The other option is the average rate. So we're preparing a 2020 tax return, for instance. We can use a source which would have added up and averaged the exchange rate for every day to come up with an average for the year. And then we would use that average exchange rate to translate our income items that occurred throughout the year. The IRS does publish an average exchange rate, both for current year and prior years. It's not in any way legally binding. You can use any reputable source, including the IRS exchange rate. And then finally, the year-end exchange rate, which is published by the Department of the Treasury. And there are instances in which you have to use that one. So this will be the exchange rate on December 31st of any given year. December 31st, 2020 for the 2020 tax year, for instance. Right, so which rates to use in various situations? For the F-bar and for MT 38, it will be the year-end exchange rate. So we take the maximum balance during the year, and regardless of which day that balance was reached, it will be translated using the exchange rate on December 31st. That exchange rate will be found on the Department of the Treasury's website. If the Department of Treasury does not cover the particular currency that you are dealing with, which is fairly unlikely, you can use any reputable source. Form 8938 will have a field for you to specify what that source is, the source of your exchange rate. Most items on your tax return, you actually have some flexibility between using the spot rate on the date of every transaction or the average rate, whichever method better reflects the situation. In most cases, it's fairly cumbersome to use the spot rate, and the end result will be very similar whether we use the spot rate or the average rate. Your paid wages every 2 weeks. We can either use the exchange rate at the date of each paycheck, or simply add them all in your local currency and translate the total using the average exchange rate. The second method is obviously easier to implement, and both of them would be very similar. An instance in which these two methods will not yield a similar result will be if you have one large transaction, one large dollar amount of income that took place on a given day. In this case, it might make more sense to use the exchange rate on the day of that transaction. Right, then we'll introduce the concept of QBU, Qualified Business Units. So it's not necessarily a legal entity. In the case of rental income, it would not be a legal entity, but it is an activity for which you have a separate set of books. You're doing your bookkeeping for that activity. You have separate sets of books. You create an income statement for that activity separate from the rest of your income. If you have a QBU, an activity for which you have a separate set of books, you do its own bookkeeping, then you would first compute that income in the local currency and then translate it using the average exchange rate for the year. Likewise, if you own PFIC within a brokerage account, that rate may be a QBU. In this case, you would likewise do all of your bookkeeping in the local currency and only translate the end numbers into US dollars. If you hold PFIC directly and not through a brokerage account, then it's probably not a QBU, and you will translate the purchase and sell price at the spot rate of that transaction. So you translate the purchase price using the exchange rate on the day it was purchased, and the sell price using the exchange rate on the day it was sold. The same would apply for most capital gain transactions as well. Finally, the foreign tax credit. We have two methods to claim the foreign tax credit. One is the paid method, in which you look at everything you paid minus any refund you received from the foreign tax authorities. It's a little cumbersome because you need to take into account every cash flow. Or you can use the accrued method, in which normally you will simply look at the amount of tax owing for a year on your foreign tax return without any consideration as to whether it was paid before filing the return in the form of withholdings or paid after you submitted the foreign tax return with the check you sent with the tax return. Right, and this has implication when it comes to exchange rates. If you are using the paid method, you will be using the spot rate on the date of every payment. If you are using the accrued method, you will use the average exchange rate of the year. As a side note, if you use the accrued method, you cannot switch back to the paid method. So if you use the accrued method, you have to keep on using it every subsequent years, which makes sense because, again, it's the easier method to implement. Form 5471 has its own set of rules. Generally speaking, the average exchange rate is used. All right, that's all for now. Again, I'm Olivier Wagner from 1040 Abroad. This is my email. If you have any question to ask me about this topic, I would love to hear back from you. Until next time, have a good one.